Sometimes the market is trending, and then sometimes the market is in consolidation. There are always different market conditions when it comes to trading. And if you don't have a plan of action for every single market condition, then you're leaving money on the table. Or even worse, you're losing money consistently by not having a specific plan of action. And in today's video, I'm going to give you that plan of action step by step so you can start making money as soon as today. The only thing you have to do is implement. Oh, and subscribe to the channel if you haven't already, because we release videos just like this on a consistent basis. And while you're at it, if you find this video helpful, go ahead and sucker punch that like button right in the face, and let's get started. This is what we like to call the easy trendline trading strategy. And this strategy works really well in trending markets. So the question is, what is a trending market? Let me kind of explain. So a trending market is a market condition at a time where you see the lows are either getting higher and higher and higher and higher and higher, and you'll notice the peaks, or in other words, the highs are also getting higher and higher and higher and higher and higher and higher and higher. This is what we call a trending market, because you can see there is a clear trend. So this market is currently in an uptrend. And the same thing goes for a downtrend. And just to kind of make it simple, I'll just invert this scale just to kind of simply show you a downtrending market. Same type of concept is you'll see the highs are getting lower and lower and lower and lower and lower and lower, and then the lows will be getting lower and lower and lower and lower and lower and lower as well. So this is a downtrend in this scenario. Why? Because the highs are getting lower and then the lows are getting lower. But if it was an uptrend, you'll notice the highs are getting higher and then the lows are getting higher as well, which is representing a clear uptrend. Now, how does this strategy work? The first thing we need to understand is how to draw an actual trend line. It's pretty simple. In order to draw a trend line, there are a few things that are required. It is required that you have 2 points at a minimum to begin the trend line. You need 2 anchor points that will even start the trend line. And the way that you draw a trend line is you want to try to connect, if it's an uptrend, in this case, it's an uptrend, you would want to look on the bottom side of the trend as if you're holding the market and kind of pushing it up. So think about it that way. So that means the trend lines that we're looking for, the trend lines that are important to us, are going to be the trend lines that are going to be on the bottom side of the market, on the downside. So once we have that established, now we're going to understand how to actually draw it. What we want to look for is we want to look for the extreme lows, and we want to connect those points. So I'll give you an example. This would be my first extreme low. So this would be considered one anchor point. Now you would attach your first point of your trend line. You kind of notice I have the trend line tool selected here. You would drop the first point of the trend line at the edge of the wick, and then we will want to look for the second anchor point. So we kind of drag this along and see what the next low is, which would be this one in this case. So once we have these 2 lines, now we have enough information to draw the trend line. Once we have our trend line made, what we want to do is we want to extend the trend line into the future. Why? Because we're going to be using this trend line not to simply plot out the first 2 lows, but we want to use this as a guideline, as a reference point in the future. So I'm just lining this up. My eyes are continuously looking at this area here while I continue to drag this into the future, because I want to make sure that it continues to line up. And then here we have our trend line made. So notice the price action is respecting this trend line multiple times. This is how you draw a trend line. So the question is, how do we enter trades on a trend line? The way we do it is, once we have our 2 first anchor points connected and we have this extended into the future, we would want to enter on the 3rd touch or more. So the best entry you want to enter on is the 3rd time the price goes up, comes back down, and touches it. This right here would be the 3rd touch. That would be one of your entries. This right here is the 4th touch. This is another entry. This would be the 5th touch, another entry. The 6th touch, another entry. The 7th touch, another entry. The 8th touch, another entry. These are all buying opportunities. We're trading with the trend. We're trading in the direction of the trend, which is a safer play. But in order to do any of this, we must first at least connect the first point, the second point, and now we extend the trend line into the future. So then we have our reference point to enter all these trades that are going to be coming once the price action approaches the trend line itself. Now let's go ahead and do another example. We'll go to GBP NZD, which is the pound versus the New Zealand dollar. Let's go ahead and zoom into the 4-hour time frame just to kind of switch things up a little bit. The first example I gave you was very straightforward, very simple. I'm sure everyone watching this video can easily see that and then draw that trend line. Super simple. Let's go a little bit more in depth. Let's go look at some trend lines. Let's go identify some that are maybe not too easy to spot, but this will give you some examples so you can start practicing on your own chart. So this right here, I see this is like one of the lowest extreme lows right here. So I'll go ahead and draw the first anchor point here, and then I'll connect the next low, which is right here. Once we have these two lows drawn, we would extend that trend line into the future. And I'll give you a quick little tip. If you are someone who continues to forget to extend these into the future, what you can simply do is click on that, click on this little gear icon right over here, the settings, and you can say extend line right, and it'll automatically extend it to the future for you. So I drew my first point, second point, and it automatically extended it into the future for me. So this is how you would do it. You would draw your first 2 points, the first 2 lows, and then if you have the feature enabled that allows you to extend it into the future to infinity, then the next time the price approaches it, your line would already be there as your reference point, and you will know this is an area you want to look for a buying opportunity. So let's do another example. This is another trend line, the first extreme low, and I'm connecting this next low over here. We have our 2 lows connected, 1, 2, and then you would enter your buy on the third touch over here. And this trade, this third touch trade, had a drawdown of around 44 pips, meaning your stop loss should be around 50 pips, and the take profit, the trade went in your favor, around 256 pips. It's a very good swing trade. Let me see how long it took. This trade from here to here took around 1 day, 24 hours worth of time to make 250 pips. Let's do another example here. This is an example of a downtrend. We want to connect the highs. Since this is a downtrend, we're looking to connect the highs and essentially pushing the price down. It is very important that you understand which direction of the price action that you draw the trend line. So in this case, the price is trending downwards. So we want to draw the trend line at the top and then kind of create what's called like a ceiling, right? So we connect the first point here, the second point here, extend it into the future, and then our trade would be right here on the third touch, which netted us around up to 390 pips on this trade. So notice, each time the price is trending upwards, my trend line is at the bottom. But if the price is trending down, my trend line is at the top. Let's do another example. We'll go to Euro USD, a very common pair. A lot of traders trade this pair. So we'll go ahead and look at this as an example as well. And actually, before I do, I would recommend just pause the video right now and see if you can figure out the trend lines that I'm going to draw here in the next couple seconds. Pause the video, draw them out, or visualize them and see if your trend lines match my trend lines. So this is the trend line I see that's going up, connecting the lows. And in fact, I'm just going to get rid of the extend line, right? Personally, I don't use that because I know to extend my trend lines into the future. So I'm connecting this bottom here, this bottom here. So this would be my uptrend. The first anchor point, second anchor point, the price action missed it a little bit, third anchor point, and the fourth anchor point, and then the price action started disrespecting that line here a little bit. So this would no longer be an active trend line, but this at one point was indeed a proper trend line at one point. Now a trend line going to the downside right here, pretty straightforward. Connect the tops. First touch, second touch, enter your trade on the down direction at the third touch. This trade would have netted you 100 pips. Another trend line right here. Connect the tops. We have our first anchor point, second anchor point. This is the information that we need to draw the trend line. Once the price starts going down over here, essentially once the price action is here, we now have enough information to recognize that this is an anchor point. This is an anchor point. Now we have the trend line and we draw it into the future. Now we're eyeing this level here to look to enter a short, to enter a sell next time the price approaches it in the future. And that is our trade right there. The next trend line I see, very simple. It's a downtrend, right? So we're going to draw the trend line at the top. And we're going to continue this bad boy all the way down. So we have first touch, second touch. Here is our third touch trade. Here is our fourth touch trade. And then here is our fifth touch trade. We draw the trend line with these two anchor points. And then these are all trading opportunities down here. Again, this works on a trending market. So notice every single trend line that I drew at the top, it's in a downtrend. It's in a downtrend. It's in a downtrend. And any trend line that I drew at the bottom, this is an uptrend. It's very important that you understand which direction that you draw the trend lines based on the direction of the trend. Now, this final note I want to mention is trend lines are respected, but at one point, the trend lines do break. The trend lines end up breaking. So just know it's going to work. It's going to work. And at one point, it will fail. So you have to be okay with some trades being losing trades, but majority of your trades being winning trades. It worked. It worked. It worked. It worked. And then the trend line got broken. Same exact thing here, and the trend line got broken. Same exact thing at the uptrend. The uptrend was respected multiple times, and then it got broken. I would say the most highest probability trade, and this is a pro tip here, highest probability trade is probably the third touch, 1, 2, 3. Highest probability trade, and the fourth touch and fifth touch, those trades start getting lower and lower probability. So first touch, second touch, this is the highest probability. And then the probability decreases the more touches that trend line gets. 1, 2, 3, highest probability. This ended up working out, and then the probability decreases. 1, 2, highest probability here as well. Now, to take this a step further, there's a few things we can do to increase the probabilities that the trendline trades are going to be working in our favor. And this is called creating a confluence. Now, there are many different types of confluences that we use here at Market Makers University that allow our traders to get many trading opportunities in the market each day. But I'm going to show you in this video, just one of the easiest ones that you can start with that's pretty simple, pretty straightforward, that'll give you some high winning trades starting today. So the first confluence we'll talk about is simply combining trend lines with what we call zones of interest, ZOIs, or in other words, support and resistance areas. Let me kind of give you an example. So we'll go to, for example, Euro NZD, and some examples of zones we can draw is simply an area where the market reaches a certain price point. Look on the right, where the market reaches a certain price point and has trouble breaching that area at least once or twice. I'll give you an example. So this would be an area of support. So this would be considered a ZOI. This would be an area of resistance. So this would be an example here. This is another example right here. This is another example right here as well. And in fact, if you extend this a little bit farther back, you'll notice this was a point of rejection once, twice, 3 times. These zones are pretty simple to draw. One thing that you must understand is whenever you're drawing these zones, you want to try to look for the most obvious and cleanest zones. In fact, if I drag this back here, you'll notice this was a very powerful level in the past history as well. So this would be the point where you would identify this zone. You saw the price went all the way up, kissed this price point over here around 1.806, and then it started rejecting back down. This would be a strong level that you want to draw into the future. Notice the price rejected once and even again another time over here. And here we have that first rejection point, second rejection point, third rejection point, price pierced through it, and then it started rejecting this price area again as well. And this last one I will draw over here for you is just right over here. The way I draw the zones is I want to try to encapsulate as much of the wicks as I possibly can, and I want to attempt to avoid as much of the bodies as I can while trying to attempt to keep this as thin as possible. So the zones, you want to keep these as thin as possible. You want to try to encapsulate all of the wicks, and you want to try to avoid as much of the bodies. In this case, I captured the entire wick, try to avoid the body, capture the wick, and try to avoid the bodies. This is a very simple, straightforward, structured way to draw these zones of interest. We'll do another quick example on Euro JPY. Pretty straightforward. It's a very easy zone that you can easily identify. Hopefully you see this already before I've drawn it, but it's right over here. It's a very clean, simple zone that you can draw right here. And the more and more you draw these zones, the more practice you'll get, the easier and faster you'll be able to identify these zones, and the better you'll be able to create the confluence with the trend lines. Now that being said, let's go ahead and show you some examples of these confluences. We already marked up Euro USD few minutes ago. So we'll go ahead and look at this chart and see what we can find. So a support zone I see over here is this area right here. So we have 1 low, 2 low, 3 lows. This area right here is a confluence area where you would be able to enter a buy. In this case, the price missed it by a little bit. Price missed it by, let's say, around 5-6 pips or so. But this is a very clean setup. Sometimes the price misses it, sometimes the price kisses it, but this will allows us to get sniper entries. And if you do miss the trade, it's completely fine. It's part of the game, and we'll just move on and look for the next trading opportunity. Now, going back to Euro NZD, these are examples of us drawing zones where the price has respected that zone multiple times. Now, there will be times where the zone ends up breaking. And then this is the key to the trendline strategy. Let me kind of explain what I mean. So we found this zone here got respected once, twice, third time, but at one point, the zone ended up being broken, and this resistance ended up becoming a support. The price pierced that zone, went back down, kissed that zone again before continuing in the direction it was already going, which is in this case the up direction. Another example, we noticed that the price respected this zone once, twice, 3 times, 4 times, and then as we continue this zone into the future, notice the price broke through it, and then it came back down to kiss it once, came back down to kiss it twice, that same exact zone. So when at one point we were looking for potential sell opportunities, in this case the price broke up, and now the price has kissed that same zone, giving us potential buy opportunities. And I'm going to explain exactly how we can use this in combination with the trend lines. We already marked up Euro USD, so we'll go ahead and look at this chart. An example I see just right on this chart itself is we have a high here, the price rejected. The price rejected once, price rejected a second time. This is a strong zone. Obviously, we extend this into the future. Notice the price rejected it a third time. And in fact, if you kind of bring this back, you'll notice the price was rejecting it from the top side as well. So at one point, this area was a support. Price broke through it, kissed it again, the same exact price level around 1.05, 1.04. Kissed it once, kissed it twice, price came back up, touched it another time. This is at a time where the price created a confluence to enter a sell. So this is a strong selling opportunity. So we have a few things right here in our favor, just kind of explain this and show you this step by step. First thing we did, we drew our trend line. We have our first touch. We have our second touch. What did we do here? We extended this into the future. First touch, second touch, extended into the future. The next thing we see is this support zone turned into a resistance once, twice, and then we noticed that the trend line and the zone, they both intersect here. So this is an area that we want to keep an eye on. We want to keep an eye on this area over here, because if the price does end up approaching it around this time frame in this intersection, this is an area where we would want to look to enter a sell. Why a sell? Because the price is trending down and we drew the trend line at the top, meaning the price has a chance of rejecting this trend line multiple times on the way down. So what would we do here? We would wait. We will continue to wait until the price touches it. This is a time where we would enter our sell. Our stop loss would be above all these technicals here, and then we would be in that trade. And this is exactly how we get sniper entries using trend lines with high probabilities, using confluences with zones of interest. This is just one of the many ways that we have at Market Makers University that allow our traders to get high probability setups and find multiple setups on a daily basis. So now that we kind of went over all the moving parts to the strategy, let's kind of recap and put all this together so you understand how to put these puzzle pieces together to create this specific strategy. So what is the first thing we learned? First thing we learned is how to actually draw the trend lines, which is just like this. You want to try to draw the trend lines at the edge of the wicks. The next thing we learned was, let me go to the Euro NZD chart. Next thing we learned was how to draw the actual zones. We have a zone drawn here, a zone drawn here, a zone drawn here, a zone drawn here. So once we have our zones drawn, we could enter the trades in the zone in the direction of the trend. Let me go to Euro USD to show you an example of that. Right over here, we have our trend line made here, and then we have our zone made here. So now the trade is on the intersection of the support zone and the trend line. There's no break or retest. The price is just respecting the zone, and we're just simply entering on the zone. So that's the first way. The first way is entering on the trend line and the zone confluence, straight simple. The second thing we learned was that zone can also be broken. Notice this zone was respected and eventually it broke. And then here, eventually it broke and it came back to retest it. So now the second way to enter with the strategy is on the break and retest. Going back to Euro USD, this was the first way we entered the trade, just on the confluence of the zone and trend line. The second way, we enter on that trend line and then the break and retest of that zone. So let's go ahead and put all this together and go to a new chart and then show you some more examples. Let's go to GBP AUD. This is the one that we looked at on the daily chart. So I'll go ahead and clear all this stuff over here. And let's just kind of zoom into like the 1 hour chart. Basically pretty much kind of where the current price action is right now. And by the way, this strategy works on all time frames. Whether you're looking at the weekly, daily, 4 hour, 1 hour, it doesn't really matter. It's going to work on every single time frame that you look at. So we'll go ahead and draw our first anchor point, second anchor point. Now we have enough information to draw this trend line. We go ahead and continue it. Notice the third touch was right over here. And you can also see that this was an area where the price was rejecting once, rejecting twice, broke through it with the retest once and then twice. So this confluence area would be the area where you would want to enter your sell. Another example, this is going in the up direction. So I'm going to draw the trend line at the bottom, connect the first anchor point, connect the second anchor point, continue this all the way to the future. Now, this would be a third touch for a buy. You'll notice there was a small zone created. So if you would have identified this zone in this small of a time frame, you'll notice the price went down, rejected, went back up, but it happened fairly quickly within from here all the way to the next time, happened in around 9 hours. So if you were awake at this time, if you were looking at the chart, once you saw the price went down, rejected way back up, and if you had the intuition to draw this zone at this point over here and then extend it into the future, and if you had the trend line made first touch, second touch, third touch, this would be the entry for the third touch, having a confluence with this zone over here. If you didn't draw that zone at that point, then this would just simply be a third touch trade. This one here, we get a little bit more time. You can notice it was a resistance at one point, then it became a support multiple times. The price has rejected this area once, twice, 3 times. In fact, I need to extend this a little bit lower to capture this wick. This does give you enough time to enter this buy. This was 4 days worth of time to identify this zone, identify this first wick, and you could have entered on this wick here. And if you missed this trade, you could have entered on this wick here. So you had plenty of opportunities to identify this area for a buy opportunity. This one right here, the price was rejecting this area. The price broke through it. Price came back down. Notice the price came back down for the retest. Then it continued to go up, but there was no trend line here. So if you were trading with a trendline strategy with the confluence of a ZOI, then there's no trend line here. So this would not be a trade for this specific strategy. But if you're trading only zones, then this would indeed be a good break and retest of the zone itself. Another zone I see right here, the price clearly made a high, clearly rejected, and you can see the price is clearly respecting the break and retest of this zone. Another small little zone right here, this wick coincides with this wick. And if you draw the trend line, first touch, second touch, third touch, the entry would be first touch, second touch, the entry would be right here once the price came back up, lined up with this zone right here. This would have been your trade. It's not too many pips. This probably would have netted you around 78 pips on this trade. Not bad, in about 5 hours. Next small little trade I see right here, we have the first touch, second touch, third touch going down. This could be a simple third touch trade where the price did reject off of this zone right here. So this could have been your confluence area. Again, I'm looking this zone here, price broke through it, came back up and retested on the trendline confluence. This would have been your short trade. This would have lasted around 3 hours, giving you around 76 pips as well. Now, you'll notice that this trendline strategy works like all over the place. Example, I'm going to start a trendline, start it here, start trendline here. If you connected the end of the wick, this would have been a missed trade. But if you would have connected the body of this trade, probably would have been a good opportunity. But I would just consider this a missed trade. Another one in the recent price action, a low here, another low here, another low there, 1, 2, 3, and then we have this price rejecting here. We have this zone. Notice I captured as much of this wick, try to avoid the bodies. So we have the first anchor point, second anchor point. We have this zone created based off of this. Price is rejecting once, twice. Price finally broke through it, came back down, kissed it back in the zone, and then it continued to fly upwards. In this case, 260 pip trade in around 17 hours. This trendline strategy happens over and over and over again. The main key point is you want to look for a trend line to draw. If the market is trending upwards, you want to draw the trend line on the bottom side. If the market is trending downwards, in this case, small little retracements, small little trend lines going down, you want to draw it on the top side. Here's another trend line you can draw on this angle. We have our first touch. We have our first touch. We have our second touch. We have our third touch. Do I see any confluences here if I look to the left? Not really. I don't really see any clear zones. The price action is kind of choppy. So if you want to take this trade, this could have been a trade without any zones, right? This is the first way I showed you, just with no zones. 1, 2, third touch, giving you some clean trade opportunities here. Around 100 pips in around 4 to 5 hours. The next thing we talked about is if we see the market is creating a zone of interest, for example, a support zone here, price created a support multiple times, and then this support zone lined up with the trend line, that is a fantastic buying opportunity. The third example we talked about is if the price lines up with the trend line, but the price has broken the resistance and turned into a support, that is a buying opportunity as well. That is a trade opportunity. Here, the zone was broken, gave us a trade opportunity. Here, the zone was broken and it gave us a trade opportunity. So you can have zones that are not broken, zones that are respected, in this case, that go along with the trend, or you can have zones that are broken that go along with the trend as well, in this case, the smaller trend, but you're waiting for the break and retest. I hope I've given you enough examples to go to your own charts, practice today, tonight, right now, whenever you're watching this, and just mark up your charts. See what trades you can find. See what time frames that this works better for you in. Maybe it works better in certain time frames for you. Maybe it works better on different pairs for you. But the main thing you have to do is you have to implement. Watching these videos isn't enough. And if you are someone who would like a little bit of mentorship, who would like a little bit of accountability, we do have a private mentorship program that we coach private students. So if you do want a little bit more information about our mentorship program, there should be a link in the description below. You can click on that link and kind of go through that process if you want more information. And by the way, there is a bit of an application process simply because I can't help everybody. I am a little bit selective about the students that we work with. So if you do want to get more information about that, again, the link is in the description. You can check that out as well. That being said, if this video was helpful, go ahead and drop a like, drop a comment down below, letting me know whether this was helpful for you or not. And if you do have video ideas that you want me to cover, video topics that you want me to go over, let me know that in the comments section below. I read every single comment that I get as well. That being said, take care, and I'll catch you guys in the next video.